Today we are diving pretty heavily into crypto, digital asset scams. This is very much an educational forum. So without further ado, we have Alec O'Sullivan. Alec is our head of operations here at Deca. And we also have Mark Bailey from Hall Chadwick, who is going to be joining us. Mark is director of both Hall Chadwick Forensic and Corporate Advisory businesses and heads the HC division at Hall Chadwick. Joni Pirovich, many titles, Joni, and we were, Marilee and I, Marilee does our admin here at Deca. We were building out your bio because we have a number. You've been involved in so many of our events. We compiled a bio. You have been a leading digital asset lawyer, founder of multiple crypto-focused legal practices. You're now across AI. You specialize in tax, regulatory frameworks, crypto-related disputes. You advise businesses. I'm pretty sure you've advised almost all leading stakeholders in the crypto industry. So it's a pleasure to have you here. And Mark, you have also been a member of Deca for many years now. I think over the past few months, you've been involved in our upcoming podcast. You'll be at our conference this year, and you're always at our policy forums, and you are the go-to for audits here in the digital asset industry. So thank you so much for joining us. I'm going to hand over to Alec. It's a pleasure and privilege to have you all here to chat today.
Welcome, Mark and Joni. So to set the stage, there's a pervasive myth that because the blockchain is a public ledger, recovering stolen funds should be as simple as following a glowing trail. Why is that trail actually a labyrinth, and where does the biggest public misconception about crypto recovery lie? And a question for you both, so whoever feels most comfortable.
Mark, you've got to tackle that one first. I'll come in after you. Thanks, Alec.
Yeah, so unfortunately, it's rarely simple, particularly when it comes to scammers tend to be pretty good at their job, and making it hard to trace the funds is part of their job. Our job is to put the pieces together to make sense of it, and that's when I say put the pieces together to make sense of it. That typically is working with people such as Joni and other legal professionals to provide the necessary evidence in court so that the courts can understand what's happened. And I'm sure throughout the course of this discussion today, an overriding principle for recovery is speed. So speed is of the essence. So getting it right the first time, super fast, in a way that a judge can understand is the critical element.
And Joni, the biggest misconception about crypto recovery?
That it can be recovered. Prevention cure, and it's still very rare that for a victim that we can recover the lost or the stolen crypto, because particularly when it is stolen and the victim is the subject of a phishing or a spear phishing attack, then the design of it is to obfuscate the pathway and to move it very quickly. So the best security measures that any of us can implement, the prevention is the cure. And if you find yourself, unfortunately, on the side of facing or being a victim of one of these scams or attacks, then definitely reach out to someone like Mark first, and you can do the tracing. Like, you can look at your public address on the block explorers. You can reach out to public organizations like SEAL, the Security Alliance, SEAL 911, and they may be able to help you track your crypto tokens as they move from chain to chain. But once once they hit the centralized exchanges, that's what we call like a washing or an obfuscation step, where the centralized exchange, they keep their customer data in a private database. And so once it goes there, that's when lawyers need to typically get involved to ask the exchanges or the centralized crypto firms for the relevant account data and the transaction data to see if ETH was what was deposited in, what was it changed into, and was it withdrawn as another type of crypto token or into a fiat currency bank account. And the investigator begins. It's certainly not an easy job. What Mark does is highly complex. Speed is key to get onto that quickly and talk to the relevant centralized exchanges that may have an opportunity to freeze that stolen value in its tracks. But the best are still highly recommended so that you don't fall victim to these sorts of awful events.
And Mark, when a victim realizes their wallet is drained, time is the ultimate enemy. So walk us through the first 48 hours. You've previously mentioned to me a fascinating case with the Dutch police where they identified a timing difference that allowed them to cancel a transfer. So are these kinds of technical timing loopholes something teams can reliably look for, or are they one in a million?
Yes, so that one involved a fiat transaction. In terms of, if your wallet is being scammed or drained, obviously urgent action is required. So, obviously, 48 hours is a long time. That there's a lot of things that need to happen a lot faster than that. Like within immediate is you need to disengage from whatever you might be connected to. If you're connected to something, you've got to disconnect. You need whatever you've got left in your address, you need to get it out as fast as possible into another wallet, and then you need to contact people like Joni or myself to see, so we can see very quickly how sophisticated it is in terms of where the funds have gone, and we can quickly make an assessment in terms of is it commercially viable to pursue. It does depend on the different. Certainly when obviously stable coins are growing exponentially around the world, and that does present a different scenario to other tokens, because there's obviously the stable coin issuer, and they do freeze funds, and we've certainly been involved in a number of cases where funds in addresses have been frozen. And that the world, it's clearly a difficult world, and that doesn't matter whether it's crypto or fiat. Obviously, the difference when it comes to the blockchain is we do have a permanent record of what's happened. So, everybody, well, not everybody, but there are so many companies looking at what goes on chain. So the Silk, go back, is it 15 years to the Silk Road saga, and there's plenty of addresses that have got lots of Bitcoin sitting in them, and it's been flagged by authorities and tech providers that service the industry where those funds are. And I think it was December last year, somebody moved $30 million out of one of the Silk Road addresses. The whole world was watching. So a lot of the scams do tend to be sophisticated organizations. So they are leaving a permanent footprint all around the world, and the world of blockchain has changed obviously massively in the last 10, 15 years. So, the AML CTF compliance of exchanges has increased massively worldwide. So trying to find an exchange somewhere in the world that doesn't have AML CTF compliance standards, that is a tiny pool today compared to what it might have been 10, 15 years ago. So the world is kind of closing in all around. Plus, people might say, well, there's AI and other increases in technology of scammers, which, yes, that's correct. They're trying to make it harder all the time. But at the same time, the industry is so big now that there's, serious companies providing technology solutions to exchanges to assist them to not deal in scammed funds, and providing tools to the likes of us that are auditing what goes on chain.
And Joni, from a legal standpoint, a theft on the blockchain crosses borders instantly. So we know that jurisdictional costs often protect scammers operating out of places like Cambodia from the Australian legal system. So when a client comes to you after a loss, what is the hardest legal truth you have to tell them on day one?
It's a tough call because this is being socially engineered, and the attackers will be able to find out information about.
Well, I think you're just breaking up a bit there, Joni.
Oh, can you hear me better now?
Yep.
Is that okay? Just to say that it's a hard conversation, and usually victims are targeted at their worst moments when there is also a world, and usually that's a dead family, usually with a lot of stress and busyness, or those types of life events. The attackers are sharing that kind of intel on the darknet to understand when is the best time to attack and get you at your worst. So if it does depend on the total value lost as to how much legal spend and forensic support can the client can spend, because it can be seen as throwing good money after bad. So there is a cost benefit analysis to be done, and what we generally come back to is, do you want to spend at least $50,000? That's the least amount of money that I've had a client spend to get something back, and it was only a small portion of what was lost back. But do you want to spend that much money and spend at least the next 3 months and likely a couple of years of your life in the court process and producing documents? Or could you use your time better to sort of start from scratch and rebuild? And instead of spending that $50,000 on legals, if you were to invest that, or if you were to save it, what would your quality of life be? And you move on. And that's honestly the frank human discussion that we have, because the complexity of the legal process domestically, which compounds massively when involved, usually it's not one, but it's many jurisdictions that the crypto tokens hop through, that legal complexity and that legal cost is usually not worth it for those victims that have unfortunately had $200,000 or less stolen from them. So it's a hard conversation to have. And some clients, despite that conversation, still want to, they don't necessarily initiate legal action, but they will fill out a cybercrime report with the AFP and give all of the details and continue to give all the details that they have to the federal police, which then allocates sort of a state police officer to the case. And then really just wait, but knowing that they've shared the information to the best of their ability And hopefully, if there is ever a mass recovery of crypto that might be part of an organised crime scheme, and this is where the likes of Jono and TRM come in, I think they're next. But if there's a mass seizure of stolen crypto, that the victims may hopefully be notified by the police and be part of the civil procedures, claim the money and the value that's been recovered. But that can take many, many years to flow through. So it's a tough conversation to have.
And Joni, when you see a hacker operating out of a particular jurisdiction, are there any that pop out that are particularly troublesome?
Well, the ones that we've traced to have routed through to Thailand, China, and Hong Kong. And when you're working with experienced, reputable lawyers in those jurisdictions, they also have incredible relationships with the local and their own federal police forces. So there was a Hong Kong-based attacker that was storing crypto on a hardware device. And through the cooperation of the Hong Kong-based law firm and the Hong Kong police, they were actually able to catch the device and then distribute the crypto.
Sorry, Jenny, we're just losing your voice a little bit. So, Mark, let's talk about tracking down these scammers. So, scammers love to run stolen funds through mixers or cross-chain bridges. Can you explain to the audience in layperson's terms how your forensic tools attempt to demix or follow these assets, and is the trail ever truly erased?
So, yeah, as I said at the start, the scammer's job is obviously to cover their tracks and make it as hard as possible that they'll be tracked down and the funds returned. And it is, it is not necessarily. It's not a hard thing with crypto to basically fracture the trails, split it out, but that's just part of our job, is to try and pull the pieces together to make sense of it. They certainly make it hard in terms of there's which I'm sure Joni can explain. The problem is when funds are commingled in addresses. So, we've got a matter at the moment where I think 99.2% of the funds in an address is clearly our client's funds. The address has been frozen by the stablecoin issuer, but they won't burn and release the funds because it's commingled, even though we can prove over 99% of it is our clients. The client is obviously extremely frustrated. At least we've been able to disrupt the scammer, and they haven't got the money, and it's a serious amount of money, so they don't have it. Success in terms of crypto scams is not always necessarily getting the money back. Is it a consolation prize that we've stopped the scammer getting the money? And because of that permanent trail, there's some hope that maybe the client can get the funds back. That process wasn't 50,000. So that process hasn't gone through the courts at all. Basically, we worked with the police, and between us and the police, we were able to have the funds frozen.
And Mark, do you see scammers exploit this untainted versus tainted commingled funds to freeze up investigations, or is it just by nature of this sector?
I think for that specific one, it was just by chance. It wasn't deliberate. There are various things that happened over probably, that happened. This is where speed is just so important. So this person had been scammed. They were in Europe. They phoned someone that phoned someone that knew someone at an Australian exchange that then contacted me. And so it took about 48 hours, for the funds to be frozen. So some of it was dripped out. And that's why I think that these people weren't necessarily tech kind of scammers, because the scam was in respect to a transaction in the real world. It's just that the payment was made in crypto. But because we were able to act so quickly and lodge forms, get the police involved within hours of the scam, we were able to stop the scammer in their tracks. So speed is just number one. But yeah, I've certainly been involved in others where people have employed pure chain techniques and various things to make it, very complex. And complex means it slows us down in investigation and increases the cost.
So the psychological toll of being told that the police or whoever can't do anything to help you must be quite extreme, and I'm sure people get very frustrated. So, Joni, as an advisor, how do you de-escalate a client who realizes perhaps there isn't as much help available to them as they thought there might be?
Well, hopefully you can hear me a little better now. I've switched devices.
That's good.
Yeah.
Okay, great. Well, I talked through a lot of the responses that I've already given today, but on top of that, it's another reason why I strongly support DECA's work and all of the law and policy reform that is necessary in this area, as well as encouraging crypto firms like exchanges to adopt an approach that security is a competitive advantage for them. So we had the Drift protocol hack a couple of weeks ago now, where over 200 million of value locked in that protocol had been siphoned away from an attacker. There are Australian victims to this attack, and part of the tokens siphoned from that protocol are USDC. Now, that is a centralized stablecoin issuer that maintains freezing powers. So could have had the ability to freeze the USDC before it went to another exchange and then was converted into different value, and they didn't. So there is now a US-based law firm that is investigating whether Circle had appropriate policies and should have acted to freeze that value. I'm not sure whether it was 50 million or a higher amount, but it was significant enough that the victims would have got cents in the dollar back in USDC if this centralized actor had been able to identify this was an attacker, it was malicious, there is no risk that it is a genuine commercial actor trying to economically gain from a transaction. They should have frozen. That is at least the allegation. And so there is this policy grey area at the moment where stablecoin issuers and other centralized intermediaries that have the power to freeze this value are not, for fear that they will be litigated against by the genuine commercial actors that want to have an economic opportunity of this. And so there is risk to freezing, even though it might seem like the most obvious and logical position. And this is what some might call a market failure, and exactly where there need to be laws that the market looks to comply with in circumstances of market or consumer harm or market failure. So we are still learning what the right thing is to do. And as we are having these attacks and more sensible people working at these centralized crypto firms, that's feeding into the evolving policy and law reform agenda, which I'm sad to say we don't have all of the mature settings yet to protect people, but we are learning and growing from them. And as you know, Alec, we're feeding you all of these recommendations for the policy submission. So a lot of the victims that I speak to are very heartened to hear that there are people like us feeding into better policies and the law reform process, but are also encouraging these private market actors, the stablecoin issuers and the exchanges, to have policies and to communicate those policies to their customers. Because if I know that there is a 24-hour freeze on anything that goes into exchange A over exchange B, which further helps my ability to stop that crypto from being converted and moving away from me, I'm probably going to pick that exchange to have the account with. And so the more security controls that an exchange or a centralized crypto firm can offer me, that is hopefully going to be part of consumers' decisions to vote with their feet in the absence of legal protections. And that's exactly what I love to share with my clients and my network, and through industry bodies like DECA.
And Mark and Joni, so from a scam prevention point of view, do you see the new digital asset framework regime preventing more scams?
I'll go to a few.
Well, it's probably an indirect thing. It's part of the way I see it is part of the evolution of the industry to being institutionally acceptable, if you like. So the compliance requirements of not just exchanges, but many service providers in the industry is increasing all the time. They are, particularly exchanges. That they are the gorillas in the room in the industry, and when one of the key advantages of blockchain and crypto is the transparency. So when you're an exchange sitting in the middle of everything that's going on, and you've got various companies that their purpose for being is to identify addresses, good ones and bad ones, and that data is being fed into exchanges. It's just part of the journey that the industry is becoming institutionally acceptable, and the net is closing in on the activity that's happening on chain.
And Joni, does the new regime, does it help clean up the sector in your view?
I think it will go some ways to cleaning up the sector. A lot of the Australian financial services licensing obligations for fit and proper and competent people to be involved in the compliance function, as well as the AUSTRAC, the AML-CTF uplifts. The travel rule will be doing a lot of work to prevent crypto going to unknown addresses, because you have to put the beneficiary address in. So the exchange or beneficiary details. And so if the scammers are forced to provide some level of identity details to the victim, for the victim to be able to enter that information to the exchange to process the transaction, all of these things, yes, they are friction, but the question is whether it's the right level of friction to deliver the most amount of protection, because there's tens of billions of dollars being lost to crypto scams still each year, which could be prevented. So I think the combination of AFSL and AML-CTF obligations is going to help. There's also the scam framework and the increasing obligations on digital platforms generally, which don't yet extend to crypto platforms, but I think there is a suggestion that they will soon. So that scam reporting framework will also uplift the maturity and level of protections. but there's, I guess, a room for DECA to have an industry standard that sort of maps the base level of security features versus all the way up to the best practice security features that an exchange or a crypto firm can have on top of the minimum level of compliance obligations that are imposed now by those legal frameworks, because it is a matter of continuous improvement on protection, because the scammers are continuously improving, including with AI.
And that leads me to my next question, Joni, specifically for you, because you're so across the AI. Do you see how AI has advanced any scams, particularly lately?
Yes, in a few different vectors. So one of the most popular ones is the deep fakes. So you can now, like, I can use AI to sort of put a screen over my image, my video image that looks like Alec. And I can feed the AI images of you so that as I'm talking, it looks like
truly
Alec.
Scary.
It is. So those biometric based face scanners for identity checking are in trouble. And there was the Claude Code accidental leak. I just put that in quotation marks because there's a number of conspiracy theories going around whether it was an actual leak or not. But that was about the latest Mythos model, which is so powerful that it's alleged to have identified security vulnerabilities in most of the major software packages being used by firms all around the world. And it's sort of not been officially released, so that there's a period of time where all of the big tech organizations in conjunction with government departments can sort of white hat and fix all of these major security bugs, so that if these powerful models get into the hands of scammers, they can't reverse engineer or ask the AI for the security vulnerabilities into XYZ bank or ABC crypto firm that's using certain open source frameworks or technologies. So there's many vectors that AI is being used to find the holes in which the attackers can take advantage of. And so security for an individual and for an enterprise is in multiple layers. So the more layers that you can build around yourself, the more of a firewall or a heavy firewall you have around your identity and your value. So, like I said, continuously improve your own security layers and ensure that there's a lot of layers in the firms that you're using to hold and transfer your value, including crypto.
Yeah, I saw Mythos today, actually. It was about 17 years these peer-reviewed software was being peer-reviewed for, and they found in a week critical bugs. So it sounds like the pace is very much increasing with AI.
Exactly. And also the fact that there's a lot of people using Claude Code and that code base leaked. So the attackers there's a suggestion that they're reviewing that code base to try to reverse engineer the vulnerabilities so that anybody using Claude Code, they may be more vulnerable. We ourselves use Claude at Crystal AOS. And we have unfortunately not received any security updates from Anthropic from the time of the leak. So as a SOC 2 and an ISO 27001 regulated entity, if we have a security incident, the first thing you do is communicate with your customers. So I'm hopeful that we're going to start receiving more direct communications if any threat vectors have been identified and are immediate, but there's been nothing yet. So one would assume no material security incidents have been identified from the leak just yet.
And Mark, a massive chunk of stolen crypto comes from founders executing rug pulls or insider exploits. How does the forensic footprint of an insider threat differ from an anonymous external hacker or scammer?
it just depends how they've approached it. So we have been involved in some of those types of things where the perpetrators have not really tried too hard to cover their tracks. So, yeah, it's very, do we want to call it project? Scam by scam basis in terms of how sophisticated they are at trying to cover their tracks. On the AI thing, the thing that concerns me is, scammers traditionally have been limited, like any business, in people and how many people they can employ to be involved in their business to run scams, and the leverage opportunity that AI will present for running pig butchering scams on social media and things. They're really going to be able to operate at scale, and potentially, AI has an inherent strength in manipulating people that use it to make them feel good. So that potentially that they'll be even better at the pig butchering type of scams on social media. But at the same time, this is a world of tech, and we use various tech tools, and the AI benefits will be implemented into the tech as well. So, when it comes to trying to put the pieces together on peel chains and mixers, or any other kind of strategy that's used, hopefully we'll be able to act faster, more accurately, and be able to explain things to judges better than we have historically.
And Joni, one last question for you before we wrap up. If you could draft one international or domestic law to aid in the recovery of stolen crypto, what would it look like? We have 30 seconds, by the way.
Well, I'd actually draft a software standard that every wallet in which crypto is stored has a return function that can be called within 24 hours, or sort of a set period of time, so that I don't think a plain language law does it, because you need technological level enforcement. So I would try to write the software standard that's adopted into laws around the world.
Great. And that is patented, I imagine?
Yeah. No, open source. So all good.
Well, thank you, Mark. Thank you, Joni. It's been a very interesting chat.
Thanks, Alec.
No, thanks, Alec.
Joni.
Thanks for having us.
Thanks,
Mira,
Joni, Mark, and Alec. That was fascinating. A little bit disheartening as well. I mean, clear expectations are required, I think, when you go into the recovery process.